going to look after our study materials, and then we shall continue again. English medium financial reporting applicable for May 2025. Under it, 23 module have been printed till now. Let's first start with module 3, then 2, then 1, and then after module 4 will be studied. First chapter, chapter 6 of paper 1, financial reporting, is NDAs on liabilities of the financial statement. Financial statement, there are some liabilities is for the NDAs. Those are discussed under the chapter 6. Then chapter 7, NDAs on the item impacting the financial statement. And chapter 8, NDAs on disclosure in the financial statement. So NDAs, there are class of classification also. In chapter 8, we will study NDAs on disclosure in the financial statement. Chapter 7, NDAs on the items impacting the financial statements. And chapter 6, NDAs on the liabilities of a financial statement. Moving on, Unit 1, NDAs 19, employee benefit. Let's download it and then we'll study this under another topic. So let's move on. NDAs and liabilities of the financial statement. How we will study? First, we will study the question and then try to solve it with our existing knowledge, and then we'll, after question, we'll look this diagram, pictorial representation. Then we'll study as per the questions pattern or the serially as recommended. Or we can just start first start with the question and its brief reading in the solve yourself sessions, and then after we'll study each line by line. So first, accounting for defined benefit plan illustrations. Illustration will be covered when we study, and questions and question bank will be for the first. The questions will be studied. We'll not try to solve the answers. Example and illustrations are there to familiarize us with the concept. So that kind of physics questions are normally not asked in exam. They exist only due to the hidden concept that's inside a question. This is the question based on chapter based on employee benefits. So remember inside your mind, looking at the topic while scrolling, anything you know about employee benefit. Now I'm trying to see the questions related to it. For shortcut to NDA system, it can be, and there exist. But first, let's look at the questions, and the other part, a shortcut, we'll study after the questions. Then we'll move on to reading the questions line by line. First questions. An entity has 100 employees. Entity has 100 employees who are each entitled to 5 working days of paid sick leave for each year. Unused sick leave may be carried forward for 1 calendar year. Sick leave is taken first out of the current year entitlement and then out of the any balance brought forward from previous year LIFO basis. In exam last attempt it was asked but based on FIFO basis. At 31st March 2011, the X1 average unused entitlement is 2 days per employee. The entity expect on the basis of experience that is expected to continue that 92 employee will take no more than 5 years of paid sick leaves in 2000 X1 and 2000 X2, and that the remaining 8 employees will take an average of 6.5 days each. The entity expects that it will pay an additional 12 days of sick pay as a result of the unused entitlement that has accumulated at 31st March 2001, 1.5 days each for 8 employees. Comment whether the entity will require to recognize any liability in respect of leaves. So, what basically it asks is whether the entity will require to recognize any liability in respect of the leaves. Any liability in respect of the leaves. And what we have given, the entity expects that it will pay an additional 12 days of six pay as a result of the unused entitlement that has accumulated at the 31st March 2000 X1. 1.5 days each for the 8 employees. So, another one is at 31st March 2000 X1, the average unused entitlement is 2 days per employee. The entity expect on the basis of experience that it is expected to continue that 92 employee will take no more than 5 days of paid sick leave in 2000 X1 X2, and the remaining 8 employees will take an average of 6.5 each days. And for the LIFO basis, an entity has 100 employees who are each entitled to 5 working days of paid sick leaves for each year. Unused sick leave may be carried forward for 1 calendar year. Sick leave is taken out first out of the current year's entitlement and then out of any balance brought forward from the previous year. First current year entitlement, after that brought forward from the previous year LIFO basis. So now listen to the answer to it. Remember the question. After this we'll study the concept notes from ICI also, concept note from Sarangs also, and concept notes from Ajay Agrawal. If possible, it's available in the PDF form. Second question, a plan provide a monthly pension of 0.3% of final salary for each year of service. There is a plan which provide monthly pension of 0.3% of final salary for each year of service. So what final salary means? Already tax adjusted, TDS adjusted, and the final salary out of within a year, and of that 0.3% only. The pension is payable from the age of 65. Determine the current service cost. So in this question we just have to look the current service cost. In this previous exam also it was asked in 2 marks. Third question, a plan pays a benefit of 140 for each year of service excluding service before the age of 25. So if you have joined the company before the age of 25, then you will not get any benefit of each year of service of RH 140. Compute the benefit to be attributed before the age of 25 and after the age of 25. There need to be a draw of a diagram, or you can just simply do the probability by using the probability factors. Fourth point, fourth question, B Private Limited has a post-employment medical plan which will reimburse 20% of employee's post-employment medical cost if the employee leaves after more than 10 and less than 20 years of service, and 50% of those costs if the employee leaves after 20 or more years of service. So when they will leave, it will determine their uh, overall per year basis, or 20% or 50%. Instead, how would you measure the benefit of the attributed for the employee services for the last 20 years, 10 years, and 20 years, and within 10 years? Next question, Cisca Private Limited has a headcount of around 1000 employees in the organization in 2000X0X1. As per the company's policy, the employee are given 35 days of privilege leaves, PL, 15 days of sick leave, SL, and 10 days of casual leaves. Out of the total PL and sick leaves, 10 paid leaves and 5 sick leave can be carried forwarded to next year. On the basis of past trend, it has been noted that 200 employee will take 5 days of paid leave and 2 days of sick leave, and 800 employee will avail 10 days of PL and 5 days of SL. Also, the company has been incurring the profit since 2000XX. It has decided in 2000X0 and 2000X1 to distribute profit of its employee at the rate 4% during the year. However, due to the employee turnover in the organization, the expected payout of the Cisca Private Limited is expected to be around 3.5%. The profit earned during X0 X1 is 2,000 crores. Cisca Private Limited has a post-employee benefit plan also available, which is the nature of a defined contribution plan when contribution to the fund amount to 100 crores, which will fall due to 12 months from the end of accounting period. The company has paid 20 crores to its employees on 2000X0X1. Instead, what will be the treatment of the short-term compensation expenses, absences, profit sharing plan, and the defined contribution plan in book of Cisca Private Limited? In the books of Cisca Private Limited, also state what will be the treatment if the contribution paid from the defined contribution plan exceed the contribution due. Further, determine what will be the counting if the payment from defined contribution plan does not fall within 12 months from the end of accounting period. Question number 6. OPQ Limited is a listed company having its corporate office at Nagpur. The company has a branch office at Chennai. The company has been operating in the Indian market for the last 10 years. The company operates the pension plan that provides a pension of 2.5% of the final salary for each year of services. The benefit becomes vested after 7 years of service. On 1st 2000X1, the company increased the pension to 3% of the final salary for each year of the service starting from 1 April 2000X1. On the date of improvement, the present value of the additional benefit for the service April 1st 2000X1 to April 1st 2000X8 was as follows. Employee with more than 7 years service on 1st January 2000X8, 2,75,000. Employee with less than 7 years of service, 2,21,000, average 4 years to go. Provide the accounting treatment in these cases. So it was the questions. Now you can just scroll and look the answers. After the completion of the overall chapter, we will in our own writing solve all those questions. For the shortcut to India's wisdom, it's saying go to that page. Let's have a screenshot of the QR. Let's first study the significant differences in India's 19 vis-a-vis AS 15 employee benefit. Particulars: constructive obligations. In India's 19 paragraph 4 subparagraph C, obligations arising from informal practices are referred to as a constructive obligations. AS 15, India's 15 para 3 subparagraph C, such obligations are simply referred to as obligations. So constructive obligations and obligation, the name is different. And definition of employee. In DS 19, the term employee includes directors whether they are full-time or not. Para 7 of the India's 19. As for AS 15, the term employee includes full-time directors. To include or not to include. And other definitions like definition of a short-term employee benefits, other long-term employee benefits, and past service cost is different in India's 19, Para 8 of India's 19. Different definitions are given in AS 15. So there is the difference of the past AS and present in the AS. Contractual agreement between a multi-employer plan and its participant. In AS 19 deals with the situation where there is a contractual agreement between a multi-employer plan and its participant that determines how the surplus in the plan will be distributed to the participants or the deficit funded. Para 37 of the India's 19. AS 15 does not deal with it. So other participation in a defined benefit plan, sharing risks between the various entities, common control. So I think I have one different one. I had to open the different box, it cleared, but I opened different one. We'll again read it out loud in another session. Fifth point, participation in a defined benefit plan, sharing risks between the various entities under the common control. As for India's 19, participation in a defined benefit plan, sharing risks between the various entities under the common control is a related party transaction for each group entity, and some disclosures are required to the separate or individual financial statement of an entity. Para 42 of India's 19. AS 15 does not contain similar provision. Another one is recognition of the past service cost. Recognition of past service costs. As per India's 19, past service cost including the curtailment is recognized as an expenses at the earlier of when the plan amendment or curtailment occurs and when the entity recognizes related reconstructing cost or termination benefit. India's 15, past service cost is recognized as an expenses on a straight line basis over the average period until the benefit becomes vested. If already vested, recognize as an employee immediately, expenses immediately. Entity recognize the curtailment when it occurs. However, when the curtailment is linked with restructuring, it is accounted for the same time as the related restructuring. Involvement of a qualified actuaries. Para 59 of the India's 19 encourages but does not require an entity to involve in qualified actuary in the measurement of all the materials post-employment benefit obligations. Para 59 of the India's 19. AS 15 neither requires nor especially encourages the same of a requirement of an actuary. Actuarial valuation. Detailed actuarial valuation to determine the present value of net defined benefit liabilities assets shall be performed with the sufficient regularity so that the amount recognized in the financial statement do not differ materially from the amount that would have been determined at the end of the reporting period. IND-AS 19 does not define the sufficient regularity. Actual valuation. Detailed actual valuation to determine the present value of defined benefit obligation is carried out at least once every 3 years, and fair value of plan assets are determined at each balance sheet date. Point number 9. Recognition of actual gains and losses. IND-AS 19 requires that the same shall be recognized in other comprehensive income and not classified to the profit or losses in a subsequent period. So, in this also, AS 15 requires recognition of actual gains and losses immediately in the profit and loss. 10th point, financial assumptions. IND-AS 19 makes it clear that the financial assumptions shall be based on the market expectation at the end of the reporting period for the period over which the obligations are to be settled. Para 80 of IND-AS 19. AS 15 does not clarify the same. Next one is discounting of post-employment benefit obligations. As per IND-AS 19, subsidiaries, associates, joint ventures, and branches domiciled outside India shall discount post-employment benefit obligations arising on account of post-employment benefit plan using the rate determined by the references to market yield at the end of the reporting period on the high-quality corporate bond. In such cases, such subsidiaries, associates, joint ventures, and the branches are domiciled in countries where there is no deep market in such bonds. The market yield at the end of the reporting period on the government bond of that country shall be used. As per AS 15, the rate used to discount post-employment benefit obligations should always be determined by the reference to market yield at the balance sheet date on the government bond. So now we'll look onto objective of this chapter. Unit 1 in Indian Accounting System Standard 19 Employee Benefit Learning Outcomes. After studying this unit, you will be able to state the objective and scope of IND-AS 19, define the term relating to employee benefits, classification of plans, net defined benefit liabilities, assets, and defined benefit cost. Examine the 4 categories of the employee benefit: short-term, post-employment, other long-term, and termination benefits. Recognize and measure all short-term employees benefit, short-term paid absences, and account for profit sharing and bonus plan. Distinguish between the defined contribution plans and defined benefit plans. Accounts for multi-employer plans, state plans, and insured benefit of the plans. Recognition and measure defined benefit plans that share risks between entities under common control. Recognize, measure, and disclose different defined contribution plans. Last subjective. And other, account for the constructive obligations plans under defined benefit plan. Apply actuarial valuation in recognition and measurement of the defined benefit plan. Remeasure the net benefit, defined benefit liabilities assets using the current fair value of the plan assets and current actuarial assumption. Determine the past service cost or a gain or loss on settlement. Recognize the components of the defined benefit cost. Present and disclose employee benefits in financial statement as per IND-AS 19. Now, let's briefly look what the chapter provides for. Unit overview. IND-AS 19. Unit overview. IND-AS 19. There are branches. First is definition relating to, and another is employee benefits. Employee benefits, classification of plans, net defined benefit liabilities, defined benefit cost. Their definition. Short-term employee benefit, post-employment benefit, other long-term employee benefit, and termination benefits. Let's start with termination benefits. Recognition, measurement, disclosure. Another is other long-term employee benefit. Under it, recognition and measurement and disclosure. Same things. But under post-employment benefit plans, there are defined contribution plans, defined benefit plans. Under defined contribution plan, recognition, measurement, disclosure. Under defined benefit plans, multi-employer plans, state plans, insured benefit, recognition and measurement. Under recognition and measurement, accounting for the constructive obligation, present value of the defined benefit obligations and current service cost, actuarial valuation, recognition of and measurement of planned assets, curtailment and settlement of defined benefit plans. Again, curtailment and settlement, presentation and disclosure, this all comes under the defined benefit plans. Now, defined contribution plans, we already talked, recognition, measurement and disclosure. Short-term employee benefits, recognition, measure and disclosure. And under the employee benefit classification plans, net defined benefit liabilities and defined benefit cost. Note, this plan may also be considered as defined contribution plans. Which one? Defined contribution plan. This can also be considered as insured benefit and defined contribution plan are same thing. Overall recording is now only 3 minutes remaining of 30 minutes of record. After that, for next 6 to 12 minutes, we'll be scrolling over the important topic from the another chapter, and we'll study that chapter in next session of 30 minutes long video. But before that, going on, objective of Ind AS 19. Let's memorize it and then we shall proceed further. The objective of this standard is to prescribe the accounting and disclosure for the employee benefits. Ind AS 19 requires an entity to recognize a liability for the services received from an employee and in expenses for the consumption of economic benefits arising from the service provided by an employee in exchange for the employee benefits. Financial statements are prepared on the accrual basis of accounting. Under this basis, the effect of transaction and other events are recognized when they occur and not when the cash or its equivalent is received or paid. They are recorded in the accounting records and reported in the accrual basis. Inform users not only of the past transaction involving the payment and receipt of the cash, but also of obligation to pay such cash in future and of resources that represent cash to be received in the future. So from this para, what we have to understand is when they occur, effects when they occur, recorded, and the period to which they relate. Next one, when the employee provides service to their employer during a period, their services lead to generation of benefit, revenues, or profit, or increased efficiency, directly or indirectly for their employee for that period. The underlying assumption of the accrual requires that for the benefit earned by in a particular period, the cost incurred in earning that benefit needs to be recognized entirely. Adherence to this requirement of the framework is what is addressed by the Ind AS 19. So look at this diagram. Provide service, i.e. work, match cost to the benefit, and benefit example revenue, profit occur, employer, employee. So from employer to employer, entities should recognize the liability, match the cost of the benefit. Entities should recognize the liability for employee benefit paid and to be paid in the future in respect of service provided by the employee. Benefit example revenue, profit accrue. An employer to employee, as benefit from the service provided by the employee is consumed, the entity should recognize the related employee benefit expenses. Provides benefit example salary, leave encashment, gratuity, pension, etc. Now, this much in this record. For the next 30 minutes, we will be for next 12 minutes, we'll be just scrolling by using the auto scroll feature, and look at the and try to catch everything that is being followed. Now I am activating the auto scroll feature. This speed will be like this.
सोच मेरी हैरान पड़ी, नजर मेरी हरियाणे जाने चेहरे का रंग तो नहीं है, ओ सुन तो एक कोई जुदा मोहब्बत हो